Hello and welcome to the September Smart Trading Monthly newsletter. The US markets have pushed to new highs while the Aussie has settled back over the last month. So let me give you an update on the markets and a couple of trades I have shared previously. But before we get started, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share are for illustrative purposes only, and I'm just showing you how I view the current market and sharing this with you. So let's head on over to the markets and see what's been happening. Here's a chart of the ASX 200. So the Aussie market is in this nice uptrend channel, and we have pushed beyond this 6,000 level here, and we are now staying above this level. And this is where we're trading at the moment. We have had a pullback over the last month. When you see long red candles like that, that signifies that week there was quite a lot of down days. If we go to the daily chart, you can see that's that pullback of that long red candle in there. And the market settled back and received some support at this level where it previously had resistance. Now we still have some time to go before we break to blue sky. Our blue sky is over here at the 6,846 mark, or sort of just under 6,900. So we're one of the few markets that hasn't broken to blue sky, but everything is healthy and we are heading back up that way, which is a good sign. But in between time, you will have the markets rise, fall back and rise. So the Aussie has had a fallback, but it's still maintaining good health in there. And sometimes when you're trading shorter term systems, you can get whipsawed out when the markets have those pullbacks. But there's also opportunities to buy into shares as well, especially shares that may have run quite a long distance that you have missed out on, and then they retrace and bounce. I like buying into bounces as well as breakouts. Now the US markets have busted to new highs again. If I zoom out of this chart, here's the 2007 peaks that we haven't broken through, which, as we know, the US market just continued booming through. And it did consolidate for some time, hit a peak over here, and then started to move sideways, and has managed now to move beyond these highs over here. So it's continuing the up move, heading up near the 3,000 level. So it'll be interesting to see whether this round number causes any resistance to the US markets or not. Time will tell. But overall, nice healthy market that's still moving higher. And as you know, I've been trading both the Aussie and the US markets. I have two core trading systems that I trade. I have my long-term weekly system, which is my long-only system that I buy and hold shares with. So I trade that system both with the Aussie and the US markets, and I can hold trades anywhere from a few months to a few years. The goal is to build up a portfolio of performing shares. In that process, get rid of the ones that aren't performing and keep the losses small, and build on the ones that are performing and keep adding to those trades. And I'll talk about that later in this video. I've also got my medium-term daily system that trades both long and short in direction, and that one I trade with CFDs. Now I teach all my trading strategies and all my systems and everything I do in the market in the Ultimate Smart Trading Mentor course. So if you want to know more and you want to get inside my head and you want to learn how I trade, I teach everything and provide my trading plan throughout that course. So let's head back over to the markets and have a look at a couple of daily system trades that I shared in my last newsletter video update. Here's APX. I entered into APX on the 22nd of August at 12.82 when it had this breakout and came up in my trading system. Met all my trading plan rules, so I entered into it. It moved very strongly the next day, then had a pullback, and then continued to move strongly, heading all the way up to $16. In the process of that strong rise, I tightened my stop loss up, and I was taken out of the trade on the 6th of September at $14.18 when that stop loss was hit. It has since fallen away and moved lower since then. So I held that trade for all of 15 days, and it was a 0.78R multiple win. And you can see it was a CFD trade that I outlaid 20% on, so I made 49.76% on the CFD amount. And if this was a share trade, that would have been equivalent to a 10% based on the total trade size. So that trade is now closed, and this was the other trade I shared with you. I entered into this one at $3.06, same signal, nice breakout, nice green candle, moved very strongly. Now the only difference with this one is this one paid a dividend on the 29th of August at 11 cents per share. So when a share is paying a dividend, it will gap down according to the dividend amount, and sometimes more with franking credits if the dividend is franked. In this case, it was 100% franked. So I always widen my stop loss up because I know I could get whipsawed out of the trade when that happens. This was a dividend day here, 29th of August. It opened a lot lower. It did retrace by the end of the day. I moved my stop loss down to this level here. So I widened it up by the dividend plus allowing for the franking credits, and it was near $3. So I put it just a little bit below $3. And having a stop loss at that level with my dividend still means I've got a break-even trade running on there. I'm not going to take a loss if the stop gets hit. So it has fallen away. It has come down near $3 and it has bounced. So once it manages to move to new highs, I will then move back to my original stop loss. But until that happens, I will be staying with this wider stop loss over here. So you always need to be aware of dividends and make sure you widen your stop loss accordingly. So that CFD trade is still open and running with my daily swing trading system. Now I have a few weekly system trades that I've had running for some time, and the goal of the weekly system is to cut any losing trades and keep those losses small. I mean, both systems is to keep your losses small, but to capitalize on the winning trades. I want to hold on to long-term trades and add to them. So here's a trade that I entered into on the 17th of August at 1907 when it moved to new highs and came up in my weekly weekend scan. I entered into it, but unfortunately it fell very strongly and hit my stop a month later. So if we go to the daily chart, you can see the fall in there. It gapped down over here with this big gap, and that day there took my stop out. So it doesn't look very healthy when you see a move like that happen. And if a share's not going to maintain health, I don't want to be in it anymore. And I'd rather keep my losses small. So I've taken a small loss of a 0.6R multiple loss. When I enter into a trade, I position size my trades so that I don't lose more than 1R. That might be 1% of your capital, it might be 2% of your capital. So based on where my stop loss is and how much I'm prepared to lose on the trade, that determines how many shares I can buy. I cover all these strategies in my Ultimate Smart Trading course. And I took a negative 8.27% loss on that trade. So I would rather be out of this trade that is underperforming, and then the trades that keep performing, I want to buy and add more. So when you build up a portfolio, you'll buy into shares. The first ones you exit are the underperforming ones, the ones that don't continue going your way. Keep the losses small, get out of them. The ones that keep going your way, have a strategy and buy more of them. So here's a share that I entered into with my long-term system on the 4th of June at 87.5 cents. This share had been beaten down. It had traded well below $2, fallen very heavily over time. If you've done my Smart Trading 101 online course, you can see that it was in a stage 4 downtrend. It moved into a basing pattern, and when it broke out that basing pattern and came up in my weekly system scan, I entered into it. It moved very strongly and even surged up near $1.45. Once it crossed a certain price point and my stop loss was in profit, that's when I can buy more and add to the trade. So this was too big a move in here. If you go to the daily chart, you can see that huge move, because remember the weekly chart is made up of 5 candles from the daily. So it was this big move in here that caused a lot of that activity in that candle on the weekly chart. I waited till it settled back and then I bought into it. So I entered into it on the 11th of the 9th, which was that day there. This is a weekly trade, so I like to look at my charts in a weekly format when I look at these trades. But I just like to show you sometimes the activity that happened in the daily so you can see why this big wick on this candle was there, and that was because of that huge gap move. So I have pyramided and bought more. So this trade is performing. So I want to buy more of this trade and add to it. So this is an Aussie share. Let me show you a US share that I've added to. So this is a share that I'm trading in the US that I bought into at $16.70 on the 21st of June. The share has been going up slowly and steadily. Had a really long pause in here where it hasn't been above the $16 level since early 2017. Went sideways, and when it broke through it and came up in my weekly scan, I entered into it the second week. So it had broken out on the weekend in the 15th of June. I saw it in my scan. I knew I wanted to enter into it the next week, so I did. It moved very strongly and my stop loss moved very strongly. And on the 28th of August, I bought more. So I bought more this week. I knew if it got above $30 and my stop loss for my pyramid was in profit, which it is now, I wanted to buy more. So I have since bought more. So I have built on these trades. I want to build on winning trades and maximize my profits and cut the ones that don't go very well. That's the golden rule of trading. Keep your losses small and your winning trades much bigger. And the way to do that is to build on those winning trades. Now for me, they have to be profitable before I will add to them. So that's an update on a couple of my trades. But before we finish up, just let me remind you how important it is to have all your strategies in a trading plan. You can have it all inside your head, and you can have a lot of information there that you've taken from all sorts of books you've read and courses, but the most important part is then putting that down on paper or on your computer in a Word document. Getting it out of your head is so important because it makes your trading so much clearer. So if you don't have a trading plan, don't forget I've got my book, Smart Trading Plans, and that's a step-by-step guide that will take you through how to develop your own personal trading plan. So you can buy that from my website or Kindle version from Amazon. And if you haven't been to my website before, head on over to www.smarttrading.com.au, enter your name and email in the box at the top of the page, or if you're on a mobile app, it might be down the bottom of the page, and you'll get my free special report, which will give you the top 10 mistakes that new traders make. And you may have already made some of these mistakes and be reading it going, yes, I did that. Or maybe you're new to trading and it might help you from making some of those mistakes. And when you enter your name and email in, you'll also go into my database and you'll get an email once a month from me when I produce my next monthly newsletter video. So thanks for watching and goodbye for now.